Tesla was the fourth worst performing stock in the S&P last week from its all-time high in late January. It's lost $197 billion in market cap. Joining us now for what's next, Gene Munster, Loop Ventures founding partner and managing partner, and Gordon Johnson, founder and CEO of GLJ Research. You know, there was a huge rise. There's been the sell-off. If you look on the whole, it's still done remarkably well. Gene, are you looking at this as a pullback to buy? Are you looking at this as something else?
Andrew, if there's a 1 year plus perspective, yes, this is an opportunity to buy. I think that the addressable market is so massive. That's where we start. We anchor our long-term view. This is $4+ trillion addressable market. Think about the smartphone market. The hardware piece is $500 billion. So this long-term view, yes, this is an opportunity. I would caution that trading Tesla is an emotional endeavor. What we've seen, the 25% pullback in the past month, is evidence of how fast this can move. And so I would caution investors, if you're thinking to trade this on a quick 1, 2, 3 months, that may not turn out well.
But before I get to Gordon, you think a year out from now, this stock is higher based on fundamentals?
I do, and I want to anchor that. And the piece that's going to, I think, surprise and ultimately move shares higher year plus is in the back half of this year. I think we're going to hear a lot more about FSD. And specifically, it's in beta right now, and there's obviously multiple ways that they can capitalize on this. But right now, it's a little bit of a fairy tale for investors when they hear about FSD and some of its hopes and promises. If they can make good on that and actually show
And by the way, this is full
around
self-driving. Gene, this is full self-driving, what you're talking about.
Full self-driving. Thank you, Andrew. That's correct. If they can make good on even advancing the beta to a public beta, it doesn't have to be you can sleep in your car. But I think if they show substance around FSD, and I want to just quick connect the links here between how a stock like Tesla can keep going higher with FSD, is that lays the groundwork to this large addressable market. And ultimately, I think that one thing I've learned in investing is if there's a massive addressable market and a company has an angle on that to maintain that, that is positive. And I think FSD, if you're just going to anchor my points in one thought, this is the year, the back half will be the year of FSD.
Gordon, I imagine you're taking the other side of this trade.
Well, yeah, let's just look at the facts, right? I think it's clear now that Tesla has a demand problem. We see Tesla more as BlackBerry versus, Apple. Think about this. Despite their growth falling from 152% in 2018, 43% in 2019, 40% last year, they've already cut the price of their cars 14 times this year already through the first 2 months versus a total of 18 price cuts last year. And after that, they shut down the production of Model 3. That shows they have a demand problem. If we move to the world's largest EV market where competition is the strongest, Europe, their market share last year fell from 30% to 10%. Their sales actually declined total in Europe by 10%. Total European market, BEV, was up actually 137%. And then if we move to China, their market share has fallen from 23% to 10%. And they saw a significant decline in growth in January. Their sales fell from over 20,000 in December to just 15,000 in January. And with the idea that Tesla somehow has a lead over everybody else, you look at what J.D. Power just came out with. They ranked Tesla 30 out of 32 cars with respect to quality. You look at Consumer Reports and what car, they also ranked Tesla second to last. Then you look to the Edmunds report on their full self-drive, where on their range of vehicles. They said every single Tesla car they looked at actually had range below the stated EPA estimate. So you're talking about a battery technology that doesn't meet up to what they're stating it is. And then again, taking a step back, every single year Tesla has lost money, excluding one-time credit sales that they're saying are going to go away. And then on full self-drive, every single independent analysis, including Navigant, ranks them dead last. In fact, they didn't register any miles in California, which means they're actually below level 3. That's the only way you don't have to register miles. So we think the reality versus the perception is far out. They're at level 2. To get to level 5, I think is years off. So to suggest they're going to be there by the end of this year, I think is, like Gene said, fantasy.
Shepard Smith here. Thanks for watching CNBC on YouTube.